Hi, I'm coming to you today from eminitraderpro, educating day traders, and we've just completed that previous video to scale or not to scale, just to present you as possibly either new traders or experienced traders in terms of what is the consensus about scaling or adding, what they call adding to a losing position. And in the last video, I basically just introduced the concept to you with a few examples without going into much great detail exactly how we do it in the concrete real time with the right edge of the screen printing new every minute or so, or however long your time frame is, like a 3-minute chart. But now today what I want to do, after you go and look at all those warnings that I put on the blog against using money you can't afford to lose, and that the trader can lose even more money than they have in their bank when they trade futures. So it's very dangerous. So always be very careful and read the prohibitions that are on my web pages to see how it's emphasized. Now, what I want to do today is let's look at today's trading and take it from the realm of what it looks like at the end of the day to what it looks like during the day. So what I'm going to do is pull this chart in there the way it looked after the opening hour. And remember, this is something that has always been done in market profile. You look at what they call the initial balance, and you see whether there's more pressure selling or more pressure on the buyer's side. And if somebody capitulates, then you want to go in the opposite direction. What we have today is just a few minutes after the open, the market put in its high. It broke a prior high, and it was clearly exhausted. There was no new supply up there. Nobody was willing to lift the market higher, and it immediately reversed more than the range of the up bar, and that looked bearish. And in fact, the market did start selling off sharply for almost up until 9 o'clock, right around here. So what I'm showing you right now on the screen is what you would have had on your chart at that time. When you, let's take this one, look a little more closely. When you're looking at the right edge and you're seeing that, let's see what we see. We see that it's a straight off sell-off. So the question in most traders' minds is going to be, is this a trend? Is this a trend? And I don't look at it that way. I can't determine a trend by one time frame. So what I do is I look at the daily chart. When I see this kind of a sell-off, I'm thinking, are they breaking a range here? Is this dangerous? Is this really going to run big time today? Most of the time it isn't. And in fact, that's exactly what we had today. So here's today's trading for the entire day, and this is where it opened. And the high up there was around 12, and the high here was right in that same. So this is the high of the day at the end of the day, and this is the high put in after the first 5-10 minutes of trading. So what we have here is enough information already. We can figure that there's levels here, and we can take a look at the green line here, the dotted green line I use representing previous day high or low. So right today this represents previous day's high. So this is breaking out of a range of a daily high, and that could be very bullish. That's why when it got slammed right after the open, that was very important information that our previous analysis wasn't in play. So then we start. What do we start doing? What we start doing is dividing into different percentiles: the 38%, the 50%, the 61.8 or the 76%. These are all levels it's likely to go to, and we also want to look at the previous day's high or low. That's very significant possible support or possible breakout point. And then when we see that this is 50%, well, some people will always put their order in and buy 50%. Did these people get burned? Just depends on when they took their profit, because 96.75, it went straight up to 6,175. That's a 5-point in less than 2 minutes. So 5 points is a good trade. That's $100. So if you put your order in automatically at 50%, you're rewarded instantly if you want to take something of a scalp. if you decided to stay in and scale, the next level that comes into play is the 38% and the previous day's high. These are very strong supports. So let's say you bought there. Did you lose? It went against you. A lot of traders would think this was a losing trade. Well, not if you're trading scale trading, because this would just be a place where you'd put on a second series of either a contract or a series of contracts. And then the next level you'd be looking for is this prior day close. And then ultimately you're looking at a target of the pivot, because this market's breaking hard. You figure it's not going to stop till it goes to pivot. If it does stop at the pivot, what does that mean? That means the market's a little stronger than you thought, and it might actually end up being an up day. But either way, this is a level to buy. The first level at the this is a good level to buy. It's a good, actually, is a 70. I got them backwards here, but this is a good buy. It's in the about the 70% range or whatever. And down here at the previous day's close is something that's generally going to be, that's going to hold or break strongly in a short period of time. It makes up its mind. So if you scaled in here, you got about a 20-minute segment where you could have taken anywhere 2 to 3 points because the market wasn't really going where you anticipated. So you might take your profit. And if it turns around, then this is a typical behavior. Previous broken support becomes resistance, and so we fade into the next segment, and we expect our next scale zone to possibly come into play. And in fact, it came into play very nicely. This box is our range. We go a few ticks above a level, a few ticks below, and this was the level that we're looking at, the previous day's close. And sure enough, in this case, you didn't take hardly any heat, a couple points, and then it went right back to the previous breakout point, tested it again, and proceeded to turn around again and be held by this previous day's high. So this is starting to look, after, say, an hour of trading or so, you're starting to think, okay, this was a false breakout. They came back inside the range, and what I'm doing now is I'm looking for it to come back inside the range, and so then the question is, where's it going to go after that? Okay, now I could be right, it could be wrong. I still could make money either way, and let's see how. If I sold here at the previous day's high, because I figure they're not going to just break right out again, now they're all those people have shifted their allegiance to one, perhaps the other side of the market. So here they're selling off, and they go right to the next zone. You could have ping-ponged this one back and forth a couple times, and this is not an unusual pattern. So we want to take a look at that always. What's it doing in areas of prior support or resistance? And in fact, it stayed in that range. They probed a little bit here, went a tick or two lower than the previous low, but they couldn't make the pivot, so they got a good strong bounce. So once again, you're up here. If nothing else, you'd certainly take profits on this explosive reply to your guess that it is indeed support. And up here, we don't want to hold firm to any belief that isn't verified. If we're seeing it have trouble at the previous day's high, then that's another sell. So this is what we got here, a nice little double top. And so this is how you look at it as a scalper. But now what about, is this over here any good as is it helping me or confusing the issue? Because this is really obvious at the end of the day, but what was it doing in real time? Let's take a look over here at the same time, around 11:15. So we come off that low pretty hard when you look at the 162 volume, but you also see there's more zones within the zones, because right here, and usually you simply trade the divergences. Look at this one here at 950. So we've got a double top. Sells pretty hard. It's one of our zones. There was a cluster of activity there that's going to provide resistance. And it sold straight off, and now you've got a cluster here. What's it going to do? But this broke down, and so you're looking for your next zone. If you bought this zone on this shorter time frame chart, it looks like, oh gee, this is dangerous. But it's just sitting in the zone for 20 minutes. You can get in easy and take your shot. So this comes down, they run the lows, and they've got this zone at the previous low of the day, so you got a combination of confluence there. And we've got the perfect indicator setup with the MACD giving a very strong divergence. So this is a super high probability trade. And when we come to our next divergence here, at 10 after 10, another time where there's often a turn in the market, 10 and 11 are common turning points. So this triple top, they run the stops by a little bit. Now they're back in the zone here. It's time to bet on the short side. And these aren't such small trades. 92.50 to 80 to 86. That's a good 6.5 points. So these are very worthwhile trades to line up and spend the time and take the money. This is another double bottom, and once again, it's in this range of a clear zone of resistance. And it's kind of a head and shoulders. If you look at that shoulder and that shoulder, it's a weak right shoulder, or left shoulder, I'm sorry. And we're off again, back ping-ponging. Now, again here, this is also a pretty bullish, a little bit better than a double bottom. And then over here, just 2 ticks away, but much higher momentum. So this oscillator alone, you could say, well, this is all I need. I'm just going to trade divergence on a MACD. But when you've got the confidence, what you can do with zone trades is recognize, if I put my money here, before the price gets there, I'm anticipating a buy signal, then it bounces my way. I have a reason to be patient and take all the money the market wants to give me. Simply, for example, I suppose I just trailed the lows of the bars. This is a good, when you're making 4, 5, 6 points, that's a real bonanza in the Nasdaq. The Nasdaq tends to turn all the time. So, and by the way, if anybody doubts that, go look at a chart, and what the Nasdaq has been doing is just what it did today. It screams off the open one direction or the other, and then the rest of the day it trades the opposite direction. This is basically what it's doing, and you're getting days like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. 24 days in a row in a straight trading zone. And this is very important information. It means we're not playing for the breakout. It'll come eventually, but you'll only be wrong one day. Meanwhile, you can score all kinds of trades every day simply by recognizing that we are in a trading range, and when you get down here, it's probably better to buy. When you get up here, it's probably better to sell. And there was a lot of selling available today. So this is typical Nasdaq, and it's not trend is your friend kind of market, and it likes to go to targets very quickly, and it often overruns the target by a good amount, maybe 10 ticks or so. So these are characteristics you want to come and learn about your market if the Nasdaq is the one you're trading, and take advantage of the repetitive behavior. Now, getting back to what we were using here, this is our R1, but it also happens to be the middle of the 50% retracement. So if we get above that and start pulling back and testing it, then the chances are this is going to go to the next zone. And in fact, it did. The next zone's that 38% on the other side of 50. And once again, it's respecting it like a good trading market always does. And you're getting lots and lots of trades where you're simply being patient. Sometimes it goes through the zone a little bit, but then put your order in to buy or to enter more contracts at the next zone. And unless this is the day, every once in a while you get a day where you're really wrong. And when that's going to happen is when it's going to finally break out of this range. Okay, so it's certainly not happening around here. And here, this is inside that range. This is inside that range. Now, this looks like a breakout of that range, and this was a day where you had to really be on your toes. It immediately snapped back, though. The next day, you're definitely looking for it to be in a range again. And you got a long range day here. So this is what happens at highs and lows in the Nasdaq. It becomes more volatile. You get a lot of good trade setups, and you sort of stake a little bit of your perception on the belief that it's in a range, and you can play the range to your advantage. And in fact, today there were lots and lots of opportunities where every time the price hit a zone, you could at least make 2.5 points, and sometimes 6, 8 points. So this is how we use zones, and I'm introducing this not so much to get you to trade this indicator. What I'm just doing is emphasizing range trade, where we want to buy the lows and sell the highs. And so when you see divergences in those cases, those are going to be your best setups. And when you combine the two, the very short term, you're just going to see it's giving you more shots of going in and out, inside and outside those ranges. So when it's up here, you just wait till it sort of peters out and hop on board. And maybe you thought, maybe you bailed here, but you still got a couple points. So, you know, you can be whatever kind of trader you are, super skittish or very slow and patient. Either way, you're going to get trades that are going to give you a lot of potential. Every time you have a little double bottom, or within a tick or two of a double bottom, double top, or double bottom. And, you know, you watch for those divergences. But what you got with all this other stuff, you've got this 3-minute chart with natural barrier standard deviations for typical resistance and support points. And then, you know, you can look at your indicators, you can look at your highs and lows on the indicators. But basically, you're fading moves because there's so many more opportunities to get good trades when you fade the moves. And because if you're using these zones, you're backing up your trade with an order in to divide the risk per contract significantly on whatever new entry you put in. And if indeed you're right, which the market is, you know, 30, maybe 29, 30 days out of 31 or whatever, make that more like 22 days out of 30, whatever, then you're going to find that this is a normal day, and you're going to make money maybe 29 out of those 30 or 22 out of the 23, whatever. So this is trading probabilities and not being afraid to take a losing trade once in a while, but realizing that with this approach of scaling, you might be on the level of greater than 90% accuracy, and that changes the whole ball game. And plus, you're adding your position when it's becoming a higher probability of going in your favor, at least enough to make a decent amount of money. So if you happen to be in 6 or 9 contracts, and you end up, your final scale is a tick or two from the low of the day, these are the days you clean up, and that's another big bonus of the scale trading approach. So I hope this helps, and if anybody has any questions, you can go to my blog, eminitraderpro, Educating Day Traders, and go to the personal coaching section, and you'll see it'll give you the opportunity there. You have the free education, the contact point, and there's the contact point. And you can give me a call anytime. I'm easily accessible. And in the meantime, I strongly urge you to look at NinjaTrader in terms of if you want to do this kind of trading that I'm showing you. If you want to draw things on the chart very quickly, and you want to be able to see them very quickly when you start to recognize them, and you want to have really good ways of telling you what the timing and the cycling is in your divergences, for example, NinjaTrader is the one, because you can do these things so quickly, and it makes the market very, very clear, and you're going to find the timing. You're going to start learning things that maybe every 20 minutes on my oscillator here, this MACD, which is, by the way, Barry Burns calls it the top dog momentum, which I got this package from him because I love this MACD so much. It's so clear. And, you know, NinjaTrader is the only software I've seen where everything's just really clear, easy to see instantly, and where it's so fast, everything's just a right click. You got all your indicators, or everything's a right click on your data series if you want to change time frames, or whatever you want to do. You want to get your daily chart over there. Everything is so easy to work with and very fast. So I highly recommend it. Meanwhile, check this out in real time, back test it for a while, see if you feel it really works. If you want to learn somebody who can possibly train you how to use it to better advantage, give me a call. Otherwise, just enjoy, and I hope it makes money for you because you're smart enough to get it working just by looking at these videos. Good for you. Okay, well, thank you very much. Happy trading.